Morning. I hope we're all well. I just need to reset this so that I can see what I am looking at. I hope we're all good. I hope we've all had a decent weekend. I hope we are all suitably prepared. There's a few things to go through, so I am going to work down my list as we go. Let's just get rid of this. I'm just going to pull this down to the bottom because that's where I prefer it. So Euro USD, come out to the weekly time frame. Last week, massive week for the pair. I mean, for the last couple of weeks, obviously huge week. Definitely dollar balls in the air. When we are looking though, obviously what we are seeing now is this higher low, potentially that push for the higher high back towards kind of 124. Perhaps 125. Not totally out of the realm at all. What we also have though are these swing situations in the market. So again, higher high, lower higher low, failure to break the highs, that push down from 122 that we saw at the beginning of the year, that drive down and that dollar recovery. And a push back into 121, which has always been a very, very key level for us. So we've got quite a few things to be mindful of as we come into this week, especially with GDP and Fed rates and the Fed statement on the horizon on Wednesday, I believe. So with all these things looming in the background, there is some potential obviously for the US dollar to strengthen up, or on the flip side, for the US dollar to completely bail off the side of a cliff. So makes sense for us to be suitably prepared for all eventualities. As far as shorts go, we have the potential to short away from 121.50. That's always been an option for us. We can see through here where we've acted as support and resistance for this level for quite a long time, with some significant results also. So shorting away from 121.50 is always an option. Not particularly comfortable taking longs unless we see some form of role reversal around 121. And probably a break above 121.20. So if we were to come down into the lower time frames, basically what we're kind of seeing now. We've broken back above 121. Now, I'm not completely sold on this. I'm not sure that we don't see a return back to 120.50 at some point, just to establish some solid support, maybe 120.70. So we need to be very mindful around those areas when it comes to potential positions. Somewhere into this 70 region does make quite a lot of sense for a potential pullback if we were going to. If you consider like this higher high, higher low series that we would like to see in a trending market, so much like we are seeing at the moment. If I just come and go to here and grab an arrow. Much like we see at the moment where we have got this higher high. Let's just change that to black because that's going to show up. This higher high, higher low, higher high, higher low. The potential for this higher high. If we were to see a low, obviously we could jump from 121 back up to the upside. Now, with that said, you come out to the 4-hour time frames, we could expect to see a pullback somewhere in the region of 120.60, 120.70, a retest of this area. To pull back to somewhere around this 70 level would make absolute sense for that higher low situation to be formed before potentially seeing that push to the upside as a result. So we do need to be mindful. We do need to be very cautious. Pops back below. Just to clarify and just to finish up, actually, while we're still looking at this potential long situation, rejections away from 2070 and a pop back above 21 would all but confirm the fact that we are heading to 2150, but more likely up to 2250. Somewhere in line with the previous swing highs that we have seen. A break back above this 50 region will be massive for the pair. In all likelihood, that break above is probably likely to see us create a fresh high, keeping in line with this macro time frame picture. That obviously we could potentially have seen a reversal. We've broken through the new highs. If we can see a swing low, which we've probably seen on the lower time frames, then we could see this drive back into 125 as an ultimate target. Certainly not out of the realms of probability, and obviously returning back, possibly back above 125. We've spent so long trading around this region, in between kind of 110, 120. So anything popping above 125 will be astronomical for this pair, and would very much likely see us heading into uncharted territory, back towards possibly 130. What possibly isn't being currently priced into the market is the fact that the US recovers as quickly as they believe they will. At the moment, it seems as if data and price is definitely dictating the fact that we're probably not expecting much positivity out of the US. We're not expecting it to grow like it should, like they're saying it will do. And that is being priced into the market as things stand at the moment. Now, if obviously that were to be the opposite and we do see the US dollar recover, the US economy recover much as they believe that they might, then you could actually see quite a drop in market price. Obviously, the Canadian dollar last week come out extremely positive with their projections and their rate statement. Kind of put themselves as the front runners for the potential to raise rates, to be the first to raise their rates and to look at some form of normality and economic recovery. So looking at potential CAD strength as well is obviously something that we need to pay attention to. With that in mind, we look at CAD yen. CAD yen, if we come out to the 4-hour time frames, we have a couple of potential situations forming on it. The yen in general has actually strengthened up a fair bit over the last few weeks. So seeing the yen strength is obviously as a positive. So if we were to break back below this 86 level, we could then open up possibilities to 85. With this CAD yen pair in particular, what we have are long and short term options, because there's definitely the opportunity for this to turn into quite a large swing trade. So if we take a look at short possibilities, if we can break back below 86, that's all but going to solidify the fact again that we are in this lower high, lower low swing situation still looking to continue. Therefore, a break back below 86 would likely lead us into a 80, finding 85.20, 85 whole number. So it's going to open up quite a nice position at 100 odd pips. The pair's not a particularly fast movement. It could probably take a day or two to reach that kind of target. However, if obviously we can break through, we would see quite a large level of support. See it through here as well previously, where this level of support is that we would then see that push into 85 happen. If we were to break above 86.60, so somewhere around these previous lows, above the previous highs of where we are currently trading at the moment, you could go as high as 70 if you wanted to and take out these previous highs. that return to 87.20 is on the cards for us. Now, again, like I said, there are short and long-term options to this pair. If we were to break back towards 86.60, then like I say, we break above that, we've got that short-term long up to 87.20. Now, if that fails to hold, if the resistance there fails to hold and we see a breakthrough, and just a typical breakout scenario, that little push to the upside, pull back and a retest before seeing price fire off up to the upside. If we were to see that kind of scenario come into play, then what we would be presented with is the possibility to fire back up into 89.20. If I just reset that, come out to the daily time frame, we can see where we're trading around this 86.70 region, 86.60 through here. A return back then and a break through that region back towards that 87.20 puts us back in the realm of this previous consolidation, like this previous lows. So these little range situation that we can see back here. History tends to repeat itself. So seeing a return back up then into that 89.20 region makes a lot of sense. So placing targets for longer term position into 89 would make a lot of sense. With that short play, if we were to break down to 85, there is every chance that we see a swing form in the market. Some form of drive back up towards 186, maybe 185, maybe towards 85.50. Once that was to swing back down, we could use 85 again as that potential breakout zone. So a break that down below, a retest and a rejection away, would lead us into positions and short positions into 83. So there are potential options for both short and long-term positions around this CAD yen. At the moment, we're just trading in between a lot of noise. We have the opportunity to take a position at 86.20 if we so wanted to, but for the extra 20 pips to ensure that we get back below this region at 86, is that worth the risk? In my opinion, probably not, and therefore we're likely to just leave it until 86 was to break. Euro Swiss, when we're looking at Euro USD, Euro Swiss is one that I am inherently looking at. I just want to clear this little region away because we've broken out of that. But what we were looking at and what we were looking for last week was the break above this 1050 level and putting us back inside of this consolidation zone, inside of this region here. Looking for that push back up to 111. And then obviously 111 to 111.50 being that secondary little range that we can see above there. So in between you've got a little bit of no man's land, but either side of that, it does look like we might have potential long positions on the card for us. The euro seems to be strengthening up across the board. So it definitely presents us with interesting opportunities. However, we can already see how noisy this region is. So difficult to look for potential clear-cut entries. So as things stand at the moment, if you're not involved from the analysis last week from 1050, it's probably likely that we are going to need to leave the position and let it do its thing. Potentially get involved above 1065 or 1070, somewhere around that region. That might present us with some form of opportunity on the pair. It's not one that's on the watch list, but it is still something where the analysis is true. We can still hold on to the analysis from the week before where we were looking for that break above 1050. So therefore, obviously, we will keep an eye on it and see how we progress. There is nothing to say that it's worthwhile continuing to take a look at. But for the time that we've just broken back above, if we can see some solid rejections or retests away, then it might present us with some form of an entry that might be worth looking at. Where did we want to go? Where did we want to go? Where did I want to go? Just want to jump that back to Euro Swiss, not Euro Swiss. CAD yen, because that presents us with the better opportunity as things stand. What I want to do here is just go through to Swiss yen very quickly. Obviously, Swiss yen was a position that we were looking at last week from that break back below. We were actually looking for an entry somewhere around 118.10, I do believe. So that seems to have come into play at the moment. I am just making sure because I am not convinced. No, 18.30 we were looking for a sell entry from. So we're obviously nicely involved in that position and letting that do its thing as things stand. Realistically, what I'm expecting to see now that we've seen this higher high form and this potential for the higher low, we're just rejecting currently away from the lows that we see through this region. So what I would anticipate at the moment, what we're expecting to see is some form of a push back to the upside. The likelihood is that we break 118.30 here and we head back towards the highs trapped in this consolidation. Yes, the yen has been strong, but I don't believe it's going to be strong enough to break through the support at 17.70. Put that back. Right, let's tackle these pound pairs. These are some pretty big positions that we need to be mindful of. Before we kind of get into it too much, there's a lot to cover with the pound at the moment. They all currently are going to present us with opportunities, but we need to be very, very mindful because there is the potential that they just flip on their head at any given point at the moment. And obviously with that, we need to be extremely mindful of that potential. The New Zealand dollar, or pound New Zealand last week, you can see that we closed with a sign of weakness. But we had broken the previous highs. If we come into the daily time frame, again, we've broken back above previous highs, seen it, created this higher low situation, that engulfing formation, that push up. So any rejection and failure to break the lows at 91.80 on the daily time frame would lead us into believing that we could potentially see those longs. The saving grace here is obviously the fact that we have won this little support region at 92.50. If you just pop this little level through here, just slide that all the way through here. We have this little region that we can look to take potential entries from and get back below. That will hold all the keys into hitting into 91.80. You can see that we've been making these lower lows, lower highs formations on the higher time frame. So as we come into like the intraday time frames, more around the 30 minutes and the hourly to take a look, what we're seeing obviously this morning is this fresh swing from 93. I was involved in this position this morning and I have subsequently closed out of it. What I'm now looking for is this break back below the lows. There is definitely the potential to take a position from here. You could take a short position now, be relatively comfortable and relatively safe, I would have thought, with a stop loss somewhere around about 93.30. With that said, why would you want to get involved? Yes, there's 30 pips down on offer down to the 50 level or 60 level. We want to get below 50. That 50 to the 70 level or the 80 level is much more clear cut. Yes, okay, we're giving pips away, but that's still 80 pips, 70 pips even, on the way down from 50 down to 80. At 80, we have a much clearer picture of where price may be heading. If we can break through 91.80, then we're all the way back down at 90. If we obviously get through 90, then the price fires all the way back into somewhere around 88.50. So there are huge potential targets for us on the pair. It depends on solely getting back below this region and this little support area that we have seen. The last thing we want to do is get involved in a short position and end up back at 94. We're much better off holding our nerve, waiting it out, not getting that fear of missing out, and just holding it through. If we were ever to break back above 93.40, 93.50, almost guaranteed to reach 94 or 94.20 again. So we need to be extremely cautious, because getting caught in the wrong side of this position at the moment, the wrong side of this pair, would cost us greatly. Shorts below does seem the logical option. It does seem to be the unanimous bias, certainly when it comes to the short-term trend at the moment, but also looking out into the larger picture. We're starting to see this downwards trajectory coming from the whole number previously, from I needed that cough, from 199. We're coming back down in, so we just need to be mindful. We just need to get through this region, and then we should be clean sailing through to 90 if that was to happen. But it just hinges on us getting below at the moment. And obviously we've seen a bit of a buy this morning, so we just need to be mindful and be a little bit patient when it comes to the pair. Pound Oz, also on the list this morning, a very similar situation. We have the potential to enter. Obviously, we've seen that push back up into 179. I was actually looking for a push away from 79.20. That hasn't quite happened. We came as high as 15. But that push away now would definitely lead into potential short positions. It's whether or not the risk side of you is happy taking that position from where it is now. You can still get away with your stop loss at 79.30, or you wait, take your position from the break below 78.70, the higher probability position. Look to ride that down to 78, and then obviously in anticipation for that potential breakout. If we come to the 4-hour time frame, if you get that breakout below 78, then we've taken out previous lows, and the only place for us to head then is into 77, and then obviously potentially further than that, somewhere in the region of 76 and then 70. You basically got a target every 100 pips on the pair. It's the same when it comes to like Euro Oz also. So there's a lot of potential surrounding it. Again, we've seen that failure to break the highs. So lower high, lower low, lower high. You can anticipate the fact that we're probably likely to see a lower low here. There has been some promising talk and rumours coming out this morning in the papers from the Bank of England Assistant Governor, talking about the potential to see massive recovery over the next 2 quarters for the UK, but we shall just need to sit on the sidelines and wait that out, really. Getting too excited around that kind of rumours and those kind of noises at the moment is probably more likely to cost us than it is to be of any benefit to us. So we do just need to be very mindful, do just need to be a bit careful surrounding these things at the moment. We don't want to get drawn into rumour mills. We need to wait for these levels to be taken out before we can look to take potential positions. It just makes sense to be mindful and a little bit cautious when it comes to the pair when it comes to these currencies at the moment. The last thing we need to do is get drawn into potential fake outs and end up in situations where we're back above. If we were to ever break back above 79.20, then that's pretty key. We're probably likely then to see a drive back into 180.80, which is obviously a situation that we do not want to see, because if that were to happen, then 82.50 is probably the likely ultimate destination for that, for potentially going higher. So we do just need to be very mindful around these regions. Having this little area in at 78.70 is key for us. If we can get back below that, take out those previous lows, at least we've got a run into 78.20. Pound CAD. Obviously, it makes sense if we're looking at massive CAD strength to have a look at the possibility for pound CAD. With the pound looking weak against multiple currencies, obviously it makes perfect sense. Have a look at the weekly, if this is what I think it is. Huge amounts of rejection from 176 all the way back into a close last week at 173. So a massive drop on the daily time frames. Nothing to consider the fact that that probably won't continue down now. The fact is, though, obviously we had broken previous highs. Certainly come out to the daily time frame there. We had broken previous highs, so we could be preparing to see a potential higher low somewhere around this 72.80 region, 72.70, somewhere around there. So options for us looking for the pair. Breaks back above 73.50, start to ring some warning signs and some alarm bells, which is where we're currently trading at the moment. Rejections away from this level, however, would be a relatively positive sign. If we could get a close somewhere back down towards 73.20, 73.30, anywhere within that region, that's probably likely to lead to quite a positive reaction for us and quite a positive scenario for us. So it's something that we do need to be cautious and mindful of. That break above is definitely not a good thing. However, staying below probably is likely to give us quite a lot of things to get excited about, to start to give us some things to think about regarding short positions. 100% shorts below 72.80, 72.70, somewhere around that region. Definitely going to bring you 100 pips into 71.70 or 71.80, somewhere around that zone. That would play in nicely with pound weakness. That would give us pound Oz, pound New Zealand trades, as well as CAD yen positions. So it gives us quite a lot to think about and to play with. Breaking back above would probably likely see us in some form of breakout situation. So we would need to wait and see for price to establish some support, probably likely to be around about 74. So we're probably likely to see some form of a push into 74 before seeing price come back, retest, and then obviously we see another push away from that 73.50 region. That would give us those longs back up to 74.80 towards 75, potentially even higher towards 77 if we were to see that previous support fail to hold or fail to act as resistance. As things stand, obviously we saw such a fundamental push, that fundamental movement away last week, that obviously we need to be very mindful of a potential snapback and a return back to this area. Price was trading up at that region for a reason. It wasn't by accident. Therefore, obviously, like I say, we started to see massive pushbacks. And it's just whether or not that the market takes the Canadian upbeat, the positivity surrounding the Canadian economy and the Bank of Canada, whether the market takes that with a pinch of salt and we see returns back up. If that were to happen, it would be quite quick. Or we see that positivity continue. We see a little bit of weakness coming to the pound, and we're going to see those drives back down towards 72. Pound dollar. Another one that we need to be mindful of and one to keep an eye on. Typically, as we've seen, the dollar has been weak, taken a bit of a battering over the last couple of days for the last 3 weeks. We saw a sharp push away last week from 140. However, I would very much anticipate some form of a retest of that area at the moment. You can see as we've opened this morning, prices just continued to climb. We've already made up, what? 70. So we've already made up 50 pips this morning. And we're very much likely to see that to continue as a push. Obviously, we have this very small area of consolidation on the 30-minute time frames. We might see some rejection away from this. In all honesty, probably unlikely. Looking at the momentum behind the 4-hour picture, we are far more likely to see a drive back into 140. If we were to see rejection from anywhere, it's going to come anywhere between 140 and 139.80 if we were to see anything. But again, we're in that situation where we had broken previous highs and we look like we are making a higher low. So it's the contradictory pair to the rest of the pound pairs. But given the weakness in the US dollar, we can't ignore it. Again, with the Euro USD situation also, we can't ignore those things. We can't ignore those situations. We have to be mindful of what is potentially in front of us. So, looking at this pair, we can potentially take longs above 39.50 if you so wanted to. The break back above this previous consolidation almost certainly going to lead us into 140, although please be mindful around 39.80. Breaks back below 139, somewhere around 38.90, would probably lead us into some form of temptation into short positions down to 38.20. With that said though, if you were patient enough, the rewards for a break above either 140 or below 138.20 are big. So don't be afraid to potentially hold out. If we can get back below 138.20, you're going to see the push all the way back into 136.80, 136.50. We will need to be mindful around 37.80, 37.20 even. Somewhere around these previous lows, we're probably likely to see some form of reaction around there. But the reward for holding your nerve and just waiting to get through this level is pretty big. Likewise with 140. A break above 140, we can already see how significant that's been for us over the last couple of weeks, over the last month while we've been trading around this region. It's been pretty big. So a break back above that area is likely going to lead us into 141 initially and then 142.50 in extension to that. That will play into the daily picture. And obviously see us trading back up towards somewhere around 145 at some point during the year. Probably, to be fair, during Q2. So throughout this first half of the year, we're probably likely to see that. It's difficult to forecast too far ahead when it comes to the pair. There's so many variables with COVID and things at the moment. So looking too far ahead at the moment is illogical. But certainly a return back towards 145 before the end of the summer looks highly probable unless something changes surrounding the US dollar and soon, in all honesty. Couple of other things to look at very quickly. Dollar CAD. We can get rid of that. That's completely irrelevant now. Still very much looking around this 125 region. If we were to see breaks above, that is going to likely spell a return back up to 126 that we were seeing before the Canadian news last week. Now that we're trading around this 145.50, 145.50, those will remember, was a level that we picked out last week. Anything below this region at the moment, you have to consider short positions. 124.50 was key to our short positions from earlier in the year, when we rode down from 129, rode into this region, found our support, obviously saw a drive back up, and recently, obviously, we have been trading around this region again. Breaks back below this 50 level are massive for the pair and will likely lead to a further 100 pip drop. Breaks back above 125 will likely lead into some form of a return to 126. Something to be very, very mindful on and cautious of. The fact is that we are in the realms of starting to make these swings again with this pair. Therefore, it's highly likely that we are going to see some form of a return back to 123.50 if we can continue to stay below. Breaks back above, like I say, we're not interested. Anything in between is completely irrelevant to us at the moment. But breaks back above 125 will probably start to trigger some warning signs and see us break back up towards the upside for sure. What else did I want to look at? Take a look at gold quickly. See what's going on with that. Very much just looking for that break above or below. That 75 region still holding strong, something that we still need to get below. So potentially shorts below 75 would give you those short runs into 64.50, into 17.65. Obviously, that pop back above the 90 level will probably likely lead us somewhere towards higher highs, back towards 18 or 18.10. Aussie dollar is one that I want to watch. I was triggered into a position first thing this morning at 77.70, which I subsequently closed because I didn't particularly like the way that we were acting first thing this morning. Closed for a very, very small profit, I believe, or a very, very minor loss. I cannot remember. But we are looking to break back above at the moment, and we're looking at breaking above this 85 region, this 90 region. So anything above that now, anything above 80, 85 would probably likely lead us into at least a 20 level. So 78.20. So that is big for the pair for sure. Obviously, breaks back below 75.50, we can potentially look to turn our attention to short positions. But as things stand at the moment, I think some form of return back to the 20 level. And then obviously a break back above that 20 level is likely to lead us all the way back up to the highs. So 78.20 would be my preferred longer term entry, looking to target back towards 80. But definitely anything closing above 77.80, 77.85 at the moment, probably likely see us run into that 78.20 level, and therefore obviously give us an early opportunity to attack that area. As things stand, I am not aware or can recall of any potential fundamentals for us to watch out for. So in that regards, I don't think there's too much for us to be mindful of today. Tomorrow and overnight, I believe that there might be Australian fundamentals. Japan monetary policy overnight tomorrow, and then obviously we have Australian CPI Wednesday night, OPEC Wednesday, retail sales for the CAD and FOMAC, all on Wednesday. So that is a huge day, and then things will start to die off a little bit. Thursday brings us USD GDP data, but apart from that, it's a relatively quiet finish to the rest of the month. So we will see where we go from there. I hope everyone's had a decent weekend. I hope everyone has a decent week, and I will catch up with people a little bit later.